right, welcome back. Today is Friday, May 20th, 2022. The markets are closed. It was another bad week for stocks. For the Dow, it was the 8th consecutive down week, something it hasn't done since 1923, so almost 100 years. For the S&P 500, it was the 7th consecutive week, which it hasn't seen since 2001. And all that, it's really just a fun stat, but it does speak to how brutal and rare this environment is. It wasn't all bad, though. The S&P 500 managed to end flat today after being down as much as 2%. It's been flirting with that VWAP from the COVID lows that we've been talking about for about a week now, and it managed to bounce there today. And what was funny is we were in bear market territory today. All the headline writers were getting ready to do their official bear market territory type stories. And the S&P 500 reversed, and we closed just shy of that. So, and something similar happened last week too. And, you know, I think it's kind of silly to just now be labeling this a bear market either way, because the trends have been broken for a while now. And whether you define it as a 20% decline or not, I mean, the NASDAQ has been in a 20% decline for weeks now. That one gave up its COVID low about a month ago, and now it's testing its VWAP from the 2018 low. I mean, that's just brutal. It's down nearly 30%. We actually kissed that VWAP from the 2018 low today, and that's where we reverse intraday. So we'll see if that holds. I think that's an important one to watch next week. Looking at the sector performance, not much has changed there. Energy leading again. I sound like a broken record there. Staples were the laggard, falling about 8%. They had been leading. So that's pretty much it. Steve, what do you make of this? What do you think of the market right now? What are you watching?
Yeah, I mean, look, from a sector perspective, I guess we might as well start there. You're looking at the spider sectors. I like to look at them on an equal weight basis. Materials are really the leader this week. Materials and energy. Materials were up 1.8% on equal weight basis. Then you had healthcare and communications. It's good to see communications go up because they've been the laggards, right? We really want to see the worst stocks stop falling. So I think there were definitely some positives mixed in. We had a really rough day. What was that? Wednesday. Stocks tried to pare back some of those losses from the middle of the week towards the end of the day today. Have some nice hammers out there on the daily. You know, let's see what next week brings. When you talk about stats like down for seven consecutive weeks or 8 consecutive weeks, I think you nailed it. Fun fact, what it really means, I don't know. It's not actionable. What it tells us is that we're due for a relief rally. When we get it and what it looks like, I don't know. But, you know, that's the environment we're in right now. We're oversold. We're at extremes. Sentiment is pretty blah. We've been selling off for about 2 months now. So I would expect some sort of mean reversion. I think the next key piece of information will come in the form of what that mean reversion looks like.
Yeah, I mean, I didn't even realize. So we're at the, what is that, the 6.618 Fibonacci retracement of the entire rally off the COVID lows as well on the NASDAQ there?
Yeah, so key level for multiple reasons, right? It'll have like confluence of interest here. So for the NASDAQ, call it 280. I think we tested that level, bounced off it this week. You know, we have the Dow and the S&P also at their VWAPs. They're the VWAPs from the COVID lows, still key levels. So I think that's giving us a really nice roadmap right now. And the reason why we're, you know, busting out the 2018 VWAP for the NASDAQ is because it's been the weakest of the indexes, right?
Yeah. So you have the S&P and the Dow hanging in there testing their COVID VWAPs, but then NASDAQ down at that 2018 VWAP. Let's talk about Dow theory a little bit. We saw new lows in the transportation index this week.
Yeah, finally. So transport somehow had been holding up a bit better than some of the other major averages. By better, I simply mean that top hadn't made a clear downside resolution yet. I'm looking at actual Dow Transports Index, not one of the ETFs when I talk about this, because the ETFs did lead to the downside. If you're looking at something like IYT, its weightings are slightly different. It does try and track the index, but doesn't do the best job. So the Dow Transportation average the past 2 weeks, really ugly. We were down about 3% last week, another 6.5% this week. We finally, broke the lower bounds, those lows from, call it, last September. So it's now joining that growing list of completed tops. And at this point, you have to look at any top that hasn't completed to the downside yet. And I'm thinking of the Bitcoin and Ethereum chart that we have at the end of this deck. When I say this, you have to treat it as like guilty until proven innocent. Because if all their peers are going to break down and resolve lower, then we should expect the rest to follow. That's just kind of been the kind of market we've been in, right? Also, something that's rather bearish from a technical perspective that's been going on for several weeks now is that markets aren't reacting to support levels, right? So whenever markets just ignore logical levels of demand, areas where we would expect buyers to step in, whenever we just cut through these key levels, it doesn't tell you technical analysis doesn't work. It just tells you that, wow, this is a particularly, extreme sell-off. Bears are really in control, yada, yada, yada. Now we'll look at those levels on the flip side now, but until that kind of action stops, so two things: we stop seeing all these tops resolve lower and break the lower bounds, and we stop seeing indexes and stocks just slice through support like it's not even there. That kind of has to change if we're going to work out a bottom. So those are two things I'm looking at from just a pure price action perspective.
Yeah, I know last week you talked about one thing that you wanted to see for a bottom was some of those laggards, the worst areas, the biotechs, the ARKs of the world, and all those finally stop going down. And You are seeing them hold those levels, right? I mean, here you have China. That's definitely been one of the worst areas.
China's been working on a bottom. A lot of the international laggards have been kind of working on a bottom for several months now. China never even took out its lows from March. When you look at a chart like this and really zoom out, this is iShares China large cap ETF FXI. It's kind of doing this at a logical level, a place where it's bottomed twice in the past. So, I think this is a pretty clean zone for China to find its footing. If China finds its footing, the international diversified indexes probably start to look a little bit better. And I would think that the growth trade in the United States is probably thawing out too. I brought along biotech to kind of, illustrate that theme today. So a lot of these beaten down spaces, when we talk about the laggards within the US, right? So not talking about China anymore, but talking about things like ARK, biotech, SPACs, anything very speculative or super growthy. We're testing, multi-year lows in a lot of these indexes. A lot of these stocks are down 70, 80, 90%. So we're really getting there, right? We want to be looking for levels, want to be looking for bottoming action. Let's just see it. Let's see some follow through. Sellers remain in control. So while we have some logical levels, we need to see bulls step in and prices react positively to these logical levels now.
Yeah. So one thing I saw floating around a lot this week was new highs in the equal weight index relative to the S&P 500, the cap weighted version. And I saw kind of two different interpretations of that, one bullish, one bearish. And I was just wondering what you make of it.
So I don't think it's necessarily bullish or bearish. The main arguments for it are typically, if equal weight is outperforming, then that speaks to positive breadth beneath the surface, which is mostly true. I would think in a lot of cases, it's typically true. And then the bearish argument is usually, but you need the leaders. We don't want to see that ratio rising, because if equal weight's outperforming, it means that the largest stocks that drive the major averages aren't doing well. So two things. What is the stock market that you're trying to evaluate? Are you trying to talk about how most stocks are doing, right? Or are you trying to talk about how the largest stocks are doing? That we like to look at things like the IWM and the Russell 2000 value line, things that indexes that illustrate how the average stock is doing rather than what the largest stocks are doing. That is a stock market in our opinion. So the fact that the biggest stocks often might not be leading is not in and of itself bearish. It just means if you're invested in the indexes, if you're a passive investor and you're just in SPYs or the Qs, that's probably not great for you. I think when you look at this ratio, a good way to explain it is when it was rising last year, you could see it, off of the COVID lows, right? When equal weight was outperforming, the market was doing really well, right? Participation was expanding. Breadth was strong beneath the surface. We were getting breadth thrust back during that time. Remember, that makes sense. Mm-hmm. Then when it started to fall, after it hit that support zone that we have drawn on the chart there where the red arrows are, when it started to fall, guess what? The market was still rising, right? It was just being propped up a lot more by the biggest stocks at that point. So again, it's what are you trying to look at? Right now, today, I would argue breadth is pretty crappy, right? So what this ratio rising is probably telling you today isn't that breadth is great under the surface. It's that the largest stocks are really, really just terrible right now, right? Which is what we're seeing. So until you see this line rising with breadth, with our breadth analysis also kind of showing us some positive signals as well, then okay, that's probably a bullish thing for the broader market. Until we're seeing breadth kind of confirm this action, I don't think there's much to see here. This is just telling you that the Microsofts, Apples, and Amazons of the world are really, really under pressure.
Yeah, I mean, it seems like over the last, call it month or so, every week we've lost another mega cap stock. Another one has broken support.
Right.
You know, one week it's Apple, the next week it's Tesla. And that's a little concerning.
And
so, Steve,
go ahead.
Yeah, let's move on to Bitcoin. You know, you and I went, we were in Palm Beach at a very big Bitcoin conference down there, permissionless. Yeah. What were there, like 7,000 people there? I mean, it was packed.
Too many. They sold too many tickets. I couldn't get into all the presentations I wanted to.
Yeah, and we didn't really fit in perfectly there. Everyone was very welcoming and accepting. But, you know, us technicians.
Sure, I fit in just fine.
Yeah. But I feel like as technicians, you know, we don't look at things the same way they might. You know, they're more into the story and everything that's going on in the DeFi space, the different projects, everything like that. We're looking at this more as one puzzle piece in the bigger flow of capital around the world. And it's definitely an interesting space, right?
Listen, I love going to conferences like that just because we get to interact with, you know, people that we don't typically see at conferences. Our network, like you said, is mostly traditional finance folks, right? So it's really interesting just kind of being there, seeing what they're talking about, all the new innovations and developments that are going on. So no, I loved it. And I also thought it was cool, the timing of it, right? Because it's not always the easiest. I've done this a couple of times now. I was also at the NFT Miami conference not long ago. It's not always the easiest explaining to laser eyes what technical analysis is. But this time it was pretty easy. It was like, hey, you know how Bitcoin stopped at 29,000 last summer? Oh, well, it's doing the same thing now. That's what we do.
Yeah.
You know, so I talked to some people about technical analysis, and, you know, everybody loves charts. There were no charts at the presentations, which I did miss. So it wasn't like the CMT symposium in that sense. But I don't know. I mean, a big takeaway for me, I'll just share like one really big takeaway. I think banks are really winning. I think the banks are going to be big winners from crypto. That's probably not a popular take. It's probably not a common take. But from things I was hearing from multiple speakers and people I spoke to, it seems like there are just not even natural partnerships that are going to take place between the banks and probably a lot of DeFi firms, like the lending protocols, just different tokens. I think they're going to have to. And I think crypto needs the banks more than the banks need crypto, because a lot of these cryptos will never reach critical mass, and they'll never reach the type of audience that they want to and probably deserve to, because a lot of these innovations are super cool. But people are still weary of it. And the banks have that distribution. They have that trust, right? So the banks partner with, you know, some lending protocol that can make 20%, maybe split it with you, make some money on their own, give you 10% instead of the 0% that you're making in your bank account now. But you don't even have to see the back end or do any of that. They're taking your money and doing it for you. I think that's just like a no-brainer type of solution for both of these industries.
Yeah, and you know, if you're thinking about sentiment at the conference, right? It wasn't as bearish as you'd expect, given we're in a 50% drawdown on Bitcoin right now. And I think you could interpret that as complacency. And I was explaining to one person, I was trying a difficult time understanding what I was saying, but I was saying that one of the most bullish things that could happen is a flush down to those 2017 highs, to really just rinse out the weak hands and reset that cycle. And I said, if you are a long-term bull on this thing, that could be a positive thing to happen. I mean, obviously, anytime something goes down, it's not a positive thing, but what it could do to reset sentiment and get it going again longer term, I think could be a positive.
Yeah, it also depends, you know, what kind of cryptos you're hanging out in, right? Because if you're in the majors, if you're in Bitcoin and Ethereum, 50% drawdown, but it could be worse if you're in growth stocks, which most investors are. Not everybody blew up in this Luna thing. So I think different sects of the crypto community are probably feeling it harder than others. And I also think that conferences like this might not be the best way to gauge sentiment either.
Yeah.
A lot of people there are the innovators and they're working on the project. So of course they're going to be super bold. You know what I mean? It's not always the investing crypto community, but more
Right.
the creator community.
And that's all I meant. I think, we look at it a little more objectively than people who are in the space itself. But yeah, I mean, they're hanging in there at those key levels again, and it should be interesting to watch them over the weekend. As a tip on what equities might do Monday and next week, right?
For sure. I mean, this is a great tell. I'm looking at cryptos every weekend. It's just awesome information now that we have while traditional markets are closed. And one thing I would just say, we're talking about tops a lot. All we do is talk about distribution patterns lately. I feel like these have held up, right? So Bitcoin and Ethereum have not broken down from their tops. You can't really say that for most stocks these days. So maybe they're telling us something, maybe not. If you zoom in on these charts, you have bearish continuation patterns, some tight flags that have formed over the past week and a half, say after those long lower wicks and those shakes beneath the former lows. So are sellers just building up energy? And then we're going to break 29,000, get a fresh leg lower, or do buyers come in here and these little coils kind of fail and we get some sort of mean reversion move? We'll have to wait and see. And then, just like we're saying about stocks, if we get that kind of move from crypto, the next big piece of information becomes, okay, now what does this bounce look like? How far did we go? Do we get 3 straight, up days, 2 straight up days? And we take what we can get at this point. Do we rally for 2 weeks? Make back 50%? Like, let's see. But that's what I'll be watching for if these levels hold. So we should know more. We should know more by Sunday night and definitely Monday afternoon.
Awesome. Well, Steve, thank you for joining us and sharing your thoughts as always. And I look forward to talking next week.
All right. Have a good weekend, man.
You too. All right. Thank you guys for watching. If you enjoyed the show, please click like and subscribe, and we'll see you again next week. Thanks.